Hello, everyone. Good morning to you, and welcome to another promising session of the Forex Mastery with Sheriff Daramola. And as usual, we are going to be reviewing together price patterns, market structures, and try to understand the market behavior using recurring trends, support and resistance levels to gain insight into the current market structure. And by the end of the session, I promise you, you will have digested enough data that will eventually aid you in making an informed but independent trading decision during the London and New York session today. It's been quite a very interesting 24 hours for us here. As you can see, we have been quite profitable on most of the financial instruments that we have been monitoring since the beginning of the week. So we are going to be looking at how well these pairs are doing, and at the same time look at how we are going to be managing our existing positions while we also get ourselves prepare to take more trading opportunities during the trading sessions today. And considering the fact that today is the last trading day of the week, Friday, there is always a psychological expectation around this kind of days. And one thing that is always very significant is that majority who are taking significant positions at the beginning of the week and had a very good position by this time will definitely want to be doing some profit-taking activity, which is likely going to reflect on the chart as price action moving in the opposite direction. So we are going to be taking all this into consideration while we dive right into the chart to see what is really going on in this market. And for those who are joining us for the first time, you are highly welcome. I'm really grateful to have you guys around. And what we simply do here is to do our technical analysis on the 1 hour time frame. So I have a handful of instruments which I shared during the course of the last weekend, which is the basis upon which we are reviewing right now. So if you do want to have a better idea into how we got to this current position we are on the chart you will be seeing going forward, I would advise you to watch those videos. And in fact, I have the links to those videos right in the description box of this current video, so you might want to watch them so that you can understand why we have made certain decisions on particular chart structures that we have here. So once again, you are welcome. And on that note, let's dive right into the business and let's see what is really going on in the market from a technical standpoint. But before we go into the details, you know how we do it. The first thing we want to be doing is to keep tabs with the fundamentals by checking the economic calendar to identify what majority in the market are looking forward to. And you know how important checking the economic calendar is for us. It helps us for better timing and also helps us to anticipate and position ourselves in such a way that we can catch any potential opportunity prior to the event, during the event, and even after the event. So let's look at the economic calendar here, and it is quite clear that today the US Bureau of Labor Statistics will be releasing the May jobs report today, which is one thing that majority in the market has been looking forward to since the beginning of the week. And you all know that the Feds will definitely, oh sorry, hold on a second please. Sorry, I'll be right back, please. I had some technical issues here that will be sorted out. Give me a moment. I'm so sorry, everyone. I had some power outage issues, which surprisingly, I'm not sure what really happened, but we were able to put some things in place to ensure that this session goes on. So I'm sorry, and welcome back. All right. So where were we before the break in transmission? Okay, so we were talking about our expectation as regards to the fundamentals for today. And I told us how we are looking forward to the U.S. Bureau of Labor Statistics report, which is coming up later today, and is one of the major events that we are all looking forward to. And in fact, the Federal Reserve too also is going to be looking forward to this event too as well. And the figures that come in today will definitely be a major determinant factor in deciding if there is going to be a likelihood of a rate hike in the next during this month or not. So we are going to be looking forward to what that is, but there is a general consensus in the market right now that there is a low chance that there will be an interest rate hike based on the data that came in from the US futures yesterday. So we are going to be looking forward to how that is going to be affecting price action, probably in anticipation of that event. And look at the previous data we have here. We have 253,000 as against a general consensus which has a projection of 190,000. So we are going to be looking forward to see what the actual data is going to be. Is it going to be just as expected, below expectation, or beyond expectation? And one thing about this is that it also has a high tendency of affecting the gold, which we are also going to be looking at and taking all this into consideration. So beside this, for today, we really do not have any other high impact event to look out for. So with that being said here, and with the information we have gathered from the economic calendar, let's dive right into the current market structure, and let's see things from a technical standpoint to understand the psychology behind the current price movement. So with that being said, we are moving right into the chart. And the first commodity we are going to be looking at today, as usual, is going to be the USOilSPOT. So let's see what we have here. All right. So the USOilSPOT have been quite a profitable trade for us since the beginning of the week. We had moment where we sold. We had moment also where we bought to as well. And in fact, on both occasions, we saw how price action had moved significantly well in our favor. And for the sake of those who are not part of our live session on Monday, let us quickly run through how the week started for us on the USOilSPOT and what led into the decision we made at the beginning of the week to sell this commodity. So at the beginning of the week, remember, during the in the video I normally share during the course of the weekend, we identified a key level at the $73 area, which is just situated right around this point here, which I'm highlighting at this point. And one thing we do about our key level is that it helps us to identify and position ourselves for any trading opportunity. So what this simply means is that as long as price action remains above our key level, we all want to look out for buying structures that will support a move to the upside. But if price action drops below our key level, then we want to be looking out for selling opportunity. And if you look at what happened since the beginning of this week, you will see how price action had consistently been rejected by the sellers around that area to give us the sign that we are likely going bearish for the week. And coupled with this whole situation here was this simple flat channel we identified at the beginning of the week. So let me zoom things in a little bit so that we can see things clearly at this point. So we had this simple flat channel where price action was initially ranging between the $73.55 and the $73.05 area, just close to our key level. And with this kind of situation, you know how we do it. We want to wait for price action to significantly break out the resistance line or break down the support line before getting an opportunity to buy or sell. And what we saw here, we never saw price action break out of that resistance line at any point in time, and instead we saw a breakdown of that key level at the $73 area, and this was prior to our live session on Monday. And in fact, I already shared an update prior to the live session that we should anticipate a breakdown of that structure. So we saw the breakdown of this level, and in fact, for those who had missed out on that opportunity, we had the privilege of adding more position or even joining if we missed the first one. And as you can see, price action came back to retest structure, confirming the downtrend, and since then we have been selling. And one interesting thing about our positions here on the US All Spot is that this market structure gave us the privilege of maximizing the bearish momentum here. So we had opportunities of adding more positions as price action broke down key structures like the $72.30, the $71.80 area, and then also the $71 area as we rode the move all the way to the downside. So it was quite an interesting first half of the week for us on the US All Spot. And during our live session yesterday, we acknowledged that this old choppy situation we have been witnessing between the $69 area and the $67.50 area could turn out to be a reversal pattern. If you remember vividly what we said about this whole structure, and we said that we are going to be identifying a neckline which we are going to be using to guide that bullish momentum to the upside. And one thing I stated here yesterday is that we are not going to be thinking of selling unless we have a significant breakdown of that demand zone at the $67.50 level, which never happened at any point in time. And with the breakout of this trend line, which was supposed to be serving as our yardstick to guide trading activity yesterday, if you remember vividly, we had an opportunity to buy the US All Spot, and we bought that move. And you can see what happened here. Price action moved over 200 pips in our favor before this old choppy situation we are witnessing right now is happening. So for those who are taking advantage of a buy opportunity here, well done to you for being on standby to have caught that move. And you know how we do it right now. The next thing we want to be doing is to ensure that we secure the current buy position. So if you still have a buy position running right now, it's appropriate that we move all stop losses to secure this current position. And from the look of things right here, I'm of the opinion that an area between the $70.40 and this $70 area seems most appropriate to lock in some profit at this point while we give room for price action to breathe. Now, with our positions well secured, all stop losses move to secure the current position. What is really going to be our plans as we get ahead of the New York and London session today? And also, we also want to take into consideration the fact that majority in this market will definitely be looking forward to what the NFP data is going to be like to make an informed decision. And if you look at what has been happening here since yesterday evening, we can see that price action had continued to reject this $71 area. So what this simply means here is that despite the bullish momentum we have been witnessing in the last 24 hours, we have seen how it is difficult for the buyers to break out of that area. As every attempt by the buyers to do that, we always see sellers come in to negate that bullish attempt. And if we go to the left to see what has really been going on around this area in the past, you will see how that level had been a major determinant of price action. So if I zoom out of that structure and let's look at what has been happening here, let's say from the second week of the month of May, we can see how that same level had been a very strong demand zone in the past. So this area has continued to be a very strong demand area, and not until during the course of this week that we finally witnessed the breakdown of that structure. And with the breakdown of this whole area, as you can see here, you know how we do it. Whenever we see price action break down a key structure just like this one, we want to expect that there is a chance that price action could likely come back and do a retest of that structure. So something like this could happen where price comes back to retest that structure, after which it incites another wave of bearish momentum to the downside. And if you look at things in the last 12 hours or so, you will see that price action is actually looking like it's following that technical expectation. So we need to be very, very careful here. We are at a critical point in the market where two questions is needed to be asked at this point. Now, the first question is, will this turn out to be a reversal pattern to incite the trend continuation of the bearish momentum that started this week? That is one question we want to be asking. Or is this going to be a situation where this old choppy situation we are witnessing here will turn out to be a trend continuation pattern that will lead to the breakout of the $71 area, retest of that structure? And you all know, if price action breaks above the $71 level, we are right back at the buyer's territory. So remember what I said here. This level has been a strong buying niche in this market throughout last month. And if price action climbs above that area and we begin to see buy pressure above that structure, then we are back within the buyer's territory at that point. So you would agree with me that we are at a critical point in the market where a whole lot of patience is required from this old structure. And you know how we do it whenever we have this kind of simple flat channel like this, where price action is trapped within a range just like what we have here between the $71 level and the $70 area. You know, we want to wait patiently for a signal to come, which is likely going to be coming in the form of either a breakout of the resistance line to give us a buy opportunity, or a breakdown of the support line to give us a sell opportunity. So with this situation we have here, if we do have a breakout of the resistance line, then definitely we are going to be looking out for buying opportunity. A retest of structure will further confirm this bullish trend, and now we're going to be having a trend continuation pattern in our books. However, if price action drops below the support line here, and then we might likely be seeing an opportunity to go into a retracement of this impulsive move that started yesterday, or probably inside a sell-off, which will be a trend continuation of the impulsive move that started this week. So these are the things we are going to be looking at on the USOilSPOT today. So we have two key structures. We have the $71 level, where if price breaks above that structure, we are looking out for buying opportunities. And if price action breaks down the $70 level, and mind you, a breakdown of the $70 level will not give us a sell stop order. We're not having a sell stop order there. We want to see some confirmations. Remember, this has been a bullish momentum in the last 24 hours. We actually want to see that price action has truly reversed at this point. So we want to wait for a breakdown to happen, retest of structure on our lower time frame, after which we want to be joining the bearish move to the downside. And if a further breakdown of this trend line that started yesterday happens, then we want to be thinking of adding more position to our existing trade. But trust me, I will be with you in the comment section of both my trading view and Telegram platform to give you updates as at when due. So that is that on the USOilSPOT for today. If you have any questions, let me know right in the comment section. I can see your comment, Solu Tionist. How are you doing this morning? I'm very sure you are new with us. You are welcome on board. So with that being said here, we shall be moving on to the next instrument we are going to be talking about. And the next instrument we are going to be treating this morning is going to be the GBPUSD. Now, on the GBPUSD, we have been profitable as well on this pair since the beginning of the week, as we have been buying it all the way from Monday. And with the situation we have here, remember at the beginning of the week, we acknowledged the fact that price action we had a key level at the beginning of the week at the 1.23400 level, as you can see here. And you know how we use our key level. When price action remains above the key level, we look out for buying opportunities, and when price action breaks down the key level, we look out for selling opportunities. And if you look at this from an holistic point of view, you will see that since the beginning of this week, price action has remained above the key level, giving us a whopping 200 pips move since the beginning of the week. And to help us be part of this bullish momentum, we acknowledge a choppy situation at the beginning of the week where price action was caught within a range between the 1.23580 and the 1.23400 level. So this was the simple channel we used to identify our trading opportunity for the week. And you know how we use it. We want to see a breakout of structure or a breakdown of the structure to give us an opportunity to either buy or sell. And since the breakout of the 1.23580 happened on Monday, that is, I think on Monday, yes, we continue to rather move all the way to the upside. So it was quite a profitable trade for us on the GBPUSD. However, during our live session yesterday, we acknowledged the 1.245 area, which had been a strong resistance line since the beginning of the week. As you can see, within that range between the 1.245 and the 1.243, we saw how this level had been a strong selling niche for participants in this market. So as soon as price gets into that area, we saw how sellers negated all bullish attempts to push price to the downside. And I made mention here yesterday that if we are going to be thinking of buying the GBPUSD at this juncture, we want to see price action break out, retest that 1.245 to take out all the sell positions here, which would definitely give us an opportunity to be part of a trend continuation to the upside. And this was exactly what happened. We had a breakout of structure, and for those who are conscious trader, after the breakout you would have set your buy limit at the 1.245 so that if a retest happens, you want to be part of the move. And that was exactly what happened as we rode price action all the way into our TP target, giving us about 90 pips in profit. Well done to you for being on standby to catch that move. And at this point, I'm not in any position right now on the GBPUSD, as after price action hit TP target yesterday night, I just went to sleep and came here this morning to see this old chopper situation going on here. And one thing about this indecision phase we are seeing here, it's very likely it is connected to the expectation of the NFP data coming in today. So majority of the market are right now in a limbo. We are waiting for a catalyst that will drive price movement at this point. And I'm leaning on to the NFP data, which is coming up later today. And it's very likely that this old choppy situation might continue for the next couple of hours into the event. Now, you can see what has been happening here since price action hit our TP target. Price action had remained within a range between the 1.254 and the 1.252 area. And so, you know, we don't want to be in this kind of situation. So we want to remain patient here, waiting for structures to mature. And what we are always looking out for whenever we have this kind of choppy situation is to see price action either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. So let's look at the potentials of sellers in this market first of all, before looking at what to look out for to buy the GBPUSD. And to have a better perspective into what is going on here, I would like us to scale up a little bit into the 4 hours time frame, as there is a simple structure here I want to share with you. Now, if you look at the structure, and if you go to as far back as, let's say, a couple of months ago, you will see how this area where price action is currently trading, or let me say ranging at this point, you will see that level had been a strong selling niche in the past. Look at what happened here in the month of May. I think around May 15th and 16th, we saw this area was a strong selling niche. We saw the same thing happen here too as well on the 12th of May. This area was a strong selling niche, and even if we go to as far back as April, we saw how that area has also been a strong selling niche. So you would agree with me that we are within a strong seller's territory at this point. So we need significant confirmation that will help us to validate that, okay, it is time to go bearish or not. So with this information we have gathered on the 4 hours time frame, let's scale back down into the 1 hour time frame and let's see how to project a trading opportunity today. So right now that we have a channel figured out between the 1.254 and the 1.252, you know what we want. We want to see a breakdown of that structure to actually sell. And considering the fact that we are within a strong selling niche, which we compared to as far back as a couple of months ago, we want to see a breakdown of that support line to give us that privilege to be part of a bearish move to the downside. And how far will that momentum go? Well, I don't know at this point, but if we use our Fibonacci retracement tool, taking into consideration the impulsive move that started at the beginning of the week here, then we want to be aiming at an area between the 50 and the 78.6 of the previous impulse leg. Now, if we do that correctly, we should be having something like this between the 1.244 and the 1.238. So I normally like to use a yellow color, which makes things a little bit clearer. And let's name this area the potential TP target for sellers. Okay, and then we also name that same area a potential demand zone if we begin to see buying pressure resume from that area, and this would likely incite a trend continuation to the upside. So I will place this right inside the box and let's have things mapped out correctly. Okay, so if we are going to be selling, that is, if price action ever breaks down the 1.252, then we are going to be aiming at the zone as our TP target, which will be dovetailing to a minimum of 80 pips to a maximum of about 150 pips thereabout. So let's see how price action plays out in that regard. So a breakdown of the 1.252 will definitely welcome some selling opportunity. So I have a sell stop order around that area, which I want to take advantage of that move if it breaks down. I've made profit this week, so I can afford to test water with some percentage of my account size. So our stop loss will be at the resistance line here, which will be dovetailing to about 20 pips thereabout, which is not bad at all on this position. So that being said, on the expectation of sellers at this point in time, the other perspective here, which is looking more likely, is the breakout of the resistance line at the 1.25400 area. And why have I said more likely? Well, because price action has been bullish since the beginning of the week, and we have a choppy situation at the end of this impulsive move to the upside, giving us something that looks like a trend continuation pattern in the form of a bullish rectangle. And in this kind of situation, it's a positive signs for buyers if we do have a significant breakout of the 1.254. Normally with this kind of situation here, considering the fact that we are within a selling niche, which we identified on the 4 hours time frame, it is quite reasonable to wait for a breakout of structure to happen first of all, and then wait for a retest before joining that bullish momentum to the upside. But in this case scenario, I am breaking my rule in such a way I'm having a buy stop order above that structure. And you know why I'm doing that? We're already profitable on this GBPUSD for this week, so we could afford to leverage on the profit we had made so far to test waters around this area to see if it's actually going to be going to the upside. And one thing about this whole structure is that there is a high chance that price action might not even retest that structure if it breaks out of that level, considering the high impact event we are waiting for today. So it could be a very sharp hike to the upside, which might make us miss out on the potential of a retest of structure. So because of this one right here, I'm having a buy stop order. But if you are a conscious trader, you want to still wait for price action to do some retest and confirmation, then you can actually scale down to your lower time frame after the breakout of structure to look out for positions that will support a trend continuation to the upside. So that is how we are going to be looking at the GBPUSD for today. If you have any questions, feel free to let me know right in the comment section. So with that being said, here we shall be moving on to the next instrument, which is the XAUUSD, another very interesting commodity for us this week, and we have been quite profitable on this one too as well. So let's see what is going on here and what has been happening since the beginning of the week. So at the beginning of the week on the XAUUSD, this is what we saw here. We acknowledged the 1940 level, which happens to be a very strong demand zone here, as you can see. And what we said here is that as long as price action remains above that demand zone, we continue to look out for buying opportunity. And look at what has been happening in this market since the beginning of the week. We saw how price action had moved over 400 pips in our favor since that day. And in fact, we had the privilege of adding more positions to our existing trade at breakout of key structures as price action finally hit our TP target during the later part of the New York session yesterday at the 1980 level. So it has been quite a profitable trade for us on the XAUUSD, and congrats to everyone who has been part of this profitable journey. Now, going into the New York session today and the London session, how do we intend to position ourselves ahead of this event? Well, if we look at what has been happening here in the last 15 hours or so, you will see that price action has been trapped within a range between the 1982 and the 1975, and this is peculiar with most of the USD peers, as majority are looking forward to what the data is going to be like as regards the labor market, which is coming up in about 4 hours or so. So in this kind of situation, we have no other choice than to remain patient, waiting for structures to mature in the form of either a breakdown or breakout of the resistant line at this point. So with the situation we have right now, let's remain patient and wait out for structures to mature based on this current structure. So we are going to be looking out for a breakout retest of this 1982 for us to be part of a bullish move to the upside. And the other scenario is if price action drops below the 1975, we want to see a retest of structure confirming that sellers are gradually gaining momentum, after which we want to join the decline to the downside. And one thing about this decline is that we also have a key structure here at the 1970, a level which has been a strong selling niche since the beginning of the week. As you can see, we saw how this level had negated bullish attempt before we saw the breakout happened yesterday. So if a breakdown of the 1970 happens, then price action would have also broken down the bullish trend line that has been supporting this momentum since the beginning of the week to the downside. And if this happens, continued selling pressure below the structures will definitely welcome more opportunities to sell the XAUUSD for today. So let's be on standby to catch any of this opportunity on the XAUUSD. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So that is that on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So we shall be moving on to the last pair for today. So we shall be moving on to the last pair for today, which is the USDJPY right here. And on the USDJPY, we have, hold on a second, I'm trying to load up. Okay. So on the USDJPY, we have actually been selling since the beginning of the week on this one. And despite the bearish momentum we saw here, things has been a very, very choppy, as we've been seeing huge spikes that buyers are trying to break out of key structures along this bearish trend to the downside. And in fact, we have a trend line to emphasize the strength of the sellers in this market after we connected the series of lower highs since the beginning of the week. So we have a trend line already, and you know from our own technical expectation, as long as price action remains below the trend line, we still feel comfortable in our sell positions while we look out for more opportunities to sell. But one interesting thing happened here in the last 24 hours in this market, and that is the fact that after selling the USDJPY yesterday, remember we had two sell positions yesterday. We had one at the 139.400 and we also had another one at the 139.120. And since price action dropped to the downside, we noticed here that as soon as price action got into that zone between the 138.5 and the 138.7 zone, we saw buy pressure resume. If you look at the nature of the wick of those candles, you will see that it's characterized by sharp rejections of this level, and this is a clear sign that insinuates that buying pressure is gradually building momentum. So will this turn out to be a platform for buying opportunities for today? Well, if it's going to be, we are not jumping in unless price action takes us out of that bearish trend line. So in that regard, I already identified a structure here at the 139.120, which also shares a beautiful confluence with that bearish trend line. So what I'm looking out for here is for price action to break out of the trend line, which also shares a confluence with the 139.120 to add more, to join the bullish momentum to the upside. And mind you, I want to see a retest of structure confirming that buyers are gradually gaining momentum for me to join any buying opportunity from this structure. So that is how I'm going to be buying the USDJPY today. Without this, in fact, I will continue to look out for selling opportunities. So with that being stated here, and considering the price action has been bearish since the beginning of the week, the only way I will be thinking of selling the USDJPY today, based on what is going on right here, it's to see price action break down this demand zone at the 138.700 level. And in fact, if it breaks down that structure, remember, we are not getting too excited here. We want to wait for confirmations to happen, and you know how we look out for confirmations. We want to scale down into our lower time frame. It could be your 5 minutes, 10 minutes, or 15 minutes time frame. Look out for retest of structure, continued selling pressure confirming that bearish momentum is gradually coming in. Then we could join that decline to the downside. But trust me, I will be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due on how to take advantage of these opportunities. So let's see how price action plays out. And for the USDJPY, our center of focus for today is simply between the 139.120 and the 138.700 area, which emphasizes the level of indecision in this market right now. And I told you it's more connected to the anticipation of the NFP data coming up later today. So let's keep this in mind, and we continue to monitor price action from this point. And it's on this note I want to call it a day here on the Forex Mastery morning live session. And I do hope that we have been able to mark these structures out on our screen. Screenshot my screen if you want to, or come back here to replay the video so that you can use it as a reference point when you're about to make your individual decisions. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So I wish you best of luck today, and I wish you a merry and happy weekend. I'm hoping to see you same time next week. But I'm going to be dropping our watch list for the week, the instrument for our watch list for the week during the course of the weekend. So you might come back to check in to see what we are going to be looking at against ahead of the new week. So do have a wonderful evening, everyone. Bye-bye.